This is the only trading strategy you will ever need. My name's Colin, and for the last 6 years, I've been dialing in something I call the Trinity model. It's gotten me funded over $650,000 with prop firms and multiple payouts. This is how it works. Alrighty, so hopping straight into the model. The first thing that we have to look for is the stat map level to be respected. As you guys have seen in my previous videos, you know that the OHLC stat map is the tool that I use to find my daily bias. If we are bullish, it will look like this. Midnight open is right here. Our bullish manipulation level that's automatically plotted by my stat map gets tagged, and then I'm bullish for the rest of the day. That's usually how it goes. For this day, it's a little bit different because if you'll notice, if we come back to our stat map, as you can see on our hourly chart, midnight open is right here. We came up, tagged bearish manipulation right here, and then we disrespected it when we closed above it here. If you guys know how I trade my stat map, you'll know that I'm only willing to take a trade if one of these levels is being respected, i.e. if we get a close back below and we do this. Here on our hourly chart, since we closed above it, we have to wait for one of two things. Either A, we have to trade all the way up to distribution before we can go lower, or we have to hop down to our 15-minute and get a 15-minute inversion back below the stat map manipulation level like this. If I'm playing this out and we come to market open, this is where we were chilling prior to market open. We had this 15-minute gap being respected, consequent encroachment being respected, all the good things. At market open, we come up, we tag bearish manipulation. So now we wait for the inversion of this 15-minute gap, which for us is right here immediately after 9:30, right here. This is the close on the 1 minute that confirms that this 15-minute gap will become an inverse. So now what we need is essentially what we're going to try to do is catch this entire leg down before it happens. And so to do that, we have to catch the retest of this inversion gap before it drops. So we wait a couple candles. Here's your retest, literally right here. We trade lower, we come up, we retest this gap, we respect consequent encroachment. And so that's step one of your actual entry, which is your high time frame gap being respected. Step two of your actual entry function comes down to your SMT, which we get once we tag back into this gap. And if you'll see on ES, we have a higher high and a lower high. And on NQ, we have a lower high and a higher high. And guys, I want to quickly mention that I do have spots open for my lifetime mentorship program. So if any of this isn't making sense to you and you want a more personal one-on-one teaching approach for this model, simply click the link below to apply for my one-on-one mentorship program. Book a call with my team, see if we're a good fit, and see if I can help you out. So this is our SMT. This is our high time frame gap. And now the very last thing when dealing with a continuation trade versus a reversal trade, continuation trade being this one where we have a 15-minute inversion and then we take the trade out of it. If we get something like this, we just need to break the low. That's all. Just break this low right here to enter. And that's all we need. And if you'll notice, that happens right here. So we break the low. This is my stop loss. We then take a standard deviation of this leg to find our targets. And we target all out at opposing liquidity, or you can target distribution as well. So for us, distribution on the stat map is all the way down here, leaving us with a 7R. So if we play this out, there's -1, so we can go break even. First trim is here, second trim at bullish manipulation, and all out at that distribution level. And that is how you trade the continuation model. Super simple. It's different than my normal stat map Trinity model where we just get a normal, respect of, let's say, bullish manipulation here. We get a trade out of this level and then it just trades up to the highs, right? This is just your normal reversal trade when we get this. I like reversal trades because they give me some really good risk to reward. Continuation trades are what we have here where we start the trend up here and then we continue them on a following hourly candle right here on the open. And so that's what we're catching, right? Our 15-minute inversion sits somewhere in here. And so our entry looks like this for our model. Okay, so this is what you're basically catching on your 15-minute. And yeah, that's the continuation model. Taking a look at another example here where we close below on our hourly chart. Here's the 1 hour. Here's our bullish manipulation level. And as you can see, at 8 a.m., we close below it. If we hop down to our 15-minute chart though, you'll notice that prior to market open, right under our bullish manipulation level, we formed this bearish fair value gap and this bearish fair value gap on the 15-minute. So if this gets inversed, I'll allow myself to have a bullish daily bias. And as you can see, we did that right here on our next 15-minute candle. So this becomes an inversion gap, and I can start to use these 15-minute gaps as my high time frame gap for my model. Right here, we're at about 9:15 in the morning. So we're going to wait till market open, which is right here. And if you'll notice, we formed SMT between these lows. If I take it on ES, we have a higher low and a lower low, while NQ puts in this lower low and higher low. We are inside of our macro and we have this inversion gap right here. That this would normally be the entry, except it's before market open, so we have to wait till after market open, which is right here. So this becomes our entry, and we simply target our external liquidity. We can also target our opposing stat map level. And if we play this out, takes a minute, but we do end up getting there. And for those of you who are like, well, you wouldn't hold all your contracts to that level. Yeah, you're right. I wouldn't, not even a little bit. I would wait and scale out my contracts starting from standard deviation levels. So half of my contracts would come off at -2, and another half would come off probably at midnight open. Another half would come off at external liquidity, which is this high. So you'd have like 3 good trims before you hit your final target. But all out, 7R with my Trinity model, using the 15-minute inversion gap as your confluence instead of an hourly close. Because if we get that hourly candle closer, it usually means that we're going to disrespect stat map. But if we get a 15-minute inversion, it means that we've changed our state of delivery and we can now use it again. And for our final example here, looking at the stat map, as you can see, midnight open is right here. We come up and close above our bearish manipulation level on our hourly chart. So now we have to come down to our 15-minute and look for a 15-minute inversion. And if you'll notice, we get that right here, your 15-minute inversion. So we can have a bearish bias and wait for the retest of this gap to take the trade out. Here's your retest right here. When we come back up and tag this gap, I then need some SMT inside of this gap. Let's pull up ES. So on ES, as you can see, we put in a higher high and a lower high. And on NQ, in the same spot, we put in a lower high and a higher high. So that's going to be our SMT. So you have your high time frame 15-minute inversion gap, you have SMT, and so now all you need is the break of this low right here, because this is a continuation trade, so we don't need an inversion gap. Okay, there's the break of your low, standard deviation, plop it on there, and we're simply going to target opposing levels, such as midnight open, external liquidities right here. There's your break-even level right here. So you actually get break-evened right here, and you can re-enter off this inversion. So this is now your new entry. Stop above this high because you got break-evened, targeting the same spot. There's your first target, or a few targets actually, because you had to stop at this high right here because you got break-evened. You got another entry right here, and then you had your -2, -3, and midnight open all get hit. And actually, you almost hit -4, but I don't believe we ended up respecting that. Oh, we did. How about that? There you go. That's a 6.5R. That's basically how you catch the 15-minute continuation with the Trinity model. It's just waiting for that 15-minute gap to get inversed and then waiting for SMT and a change in state of delivery back out. Again, I have spots open for my one-on-one mentorship program. So if you want a more hands-on approach to learning this model, all you have to do is click the link in the description and apply for my one-on-one mentorship. You'll basically book a call with a member of my team and they'll get you interviewed and make sure you're a good fit. Thank you guys for watching. If you enjoyed, make sure to like and subscribe. And if you have anything that you want me to post in the future, please make sure to leave that in the comments. Thank you guys for watching, and I'll see you all next time. Peace.